The cryptocurrency market has continued to feel the consequences of FTX's crash recently. It's safe to say that the FTX collapse brought cryptocurrency prices down a great deal, and since the demise, the Bitcoin Obituaries List has added 2 deaths to the long list of written obituaries published since December 15, 2010. Now, according to the list, Bitcoin has died 466 times since 99bitcoins.com started the deaths list. So far in 2022, roughly 22 Bitcoin obituaries have been added this year, which is more than 2010, 2011, 2012, 2013, and of course 2020 in terms of deaths per year. The repercussions of FTX's bankruptcy are severe, with over 1 million people and businesses owed money following the collapse of the crypto exchange. The implosion of FTX has spread ripples across the industry, hobbling liquidity at firms with exposure to what was once the world's biggest crypto exchange, and prompting investigations by regulators in several countries. It has fanned fears about the future of the crypto industry after FTX outlined a severe liquidity crisis. Joining me now from London in the United Kingdom is Ola Atose, founder and CEO of KoinKoin Crypto Exchange. Ola, welcome again to Business Edge. This is a story we've been following, and I know you've been following closely as well. So let's start with what, according to some prosecutors and federal authorities, were the fact that there were warning signs. So apparently FTX has been under investigation, or rather was under investigation, for a number of months before the crash that happened. So these warning signs, what do you think was the behavior, the workings of FTX that tipped authorities off that something wasn't right? And I think the bigger question is, could authorities really have stepped in to prevent this collapse?
Yes, good morning, Tolu. Thank you very much for having me. I wish we were discussing something akin to what we had discussed last time, as opposed to discussing FTX, which is, now a swear word, if you like, in this industry. So to your question, I have often called for regulation in the centralized exchange space. A lot of the exchanges currently operate as best they can, like financial services companies. Unfortunately, a lot of people running exchanges don't have financial services experience. I've echoed over the times that without this experience, it's very difficult to really understand how best to handle value or handle money. So whether crypto is an asset, whether it's a commodity or a currency, the norms of the financial services industry, which have been developed over decades, still apply and should apply. Not just regulation, but the norms, as I say, of financial services in all ways should apply to the cryptocurrency industry, and they haven't. So to that large extent, you have the FTX case. Even if the regulators wanted to step in at some point, their concern is, well, how do they step in? How much information do the regulators really have in terms of what needs to be done? What was really going on at FTX? What's the very nature of their business model? Were they just an exchange? How much of their business was OTC? With regards to the investor money they got, how did they invest that money? Again, then there's their token, FTT. How much of their investment went into FTT? How are they doing that? How are they able to sort of take so much money and not have a corporate structure in place? These are the issues, that the regulations and regulators, I would say, should seek to, put in place, for cryptocurrency companies. And again, they went in place. As a result, it was very difficult for the regulators to really understand how to unravel what was going on, at FTX. Again, we can talk about the corporate structure or lack thereof at FTX. Without a corporate structure, it's almost impossible for even a regulator to come in and find out what was going on. So these issues at FTX were numerous. What this will do to the industry, I think it's too early to say. We haven't really had a contagion within crypto before. I think this is really the first contagion whereby a large company is going down and it's affected a number of other companies. Crypto companies, other crypto exchanges have started to go down. A number of funds are going down.
Yes.
As a result of all the the errors made here. So it's the first in crypto. We don't know how this is going to pan out. With regards to Bitcoin and the depression we're seeing in the price, it's too early to say what will happen to Bitcoin. Will it survive? Will it not? If you look at the Bitcoin chart and you line it up to the dot-com bubble chart from 95 to the year 2000, there are some similarities, so that is very worrying. It is, of concern. But I think there's a lot of light at the end of the tunnel, given that the technology offers a lot of solutions. We can talk about what we're trying to do with our borderless Africa, borderless world mantra, which focuses less on investment grade crypto like Bitcoin and more on how we can use the stable coins and the underlying blockchain tech to make cross-border, transactions in Africa a thing, right? To join us all together in Africa. So these are the things that are happening in this space, and I think there's a lot more that will come out when the FTX issue is firmly in the rearview mirror.
Okay, so you talk about you being one of those who've advocated for regulation, and we'll get into that. But there's a lot of money at stake and a lot of money right now missing. Just to be able to sort of domesticate it, the founder and CEO of FTX, Sam Bankman-Fried, he was at one point wealthier than Africa's wealthiest man, Aliko Dangote. But as of last week, he went bankrupt, just to be able to give the audience an idea of being able to weigh his wealth. So when we look at what's missing, we're talking about maybe around $30 to $40 million is missing. And of course, when you look at the decentralized nature, the anonymous nature that is, of course, cryptocurrency and the crypto market, there's a question as to where could this money have gone and could the money ever be recovered? So there's I guess at this point, maybe we'll call it the theory of a hack. And then, of course, there's the theory that the CEO himself is involved. And then just, of course, a number of other theories. Where do you think the money is? Can anybody who has invested, including the funds, hope that someday, somehow, they may have their money recovered? Ola?
That's a very tough question, I got to say. So with regards to the hack, as you say, there's a number of things we've all heard. One of the things I heard was that, I think the FTX operation is based out in the Bahamas. The authorities in the Bahamas, were able to claw back, some money owed to them through this hack. I honestly, I don't know. In terms of can people get their money back? I would probably say if we start with the paper trail, right? So a lot of people would say in crypto, maybe perhaps there's no paper trail. That's not necessarily the case. There are ways by which, we can easily unravel how the funds that came in, where they went, did they go into the token, which FTX owned FTT? And if they did that, what was the process they did that? How did they do that? Did they convert their dollars, presumably, to one of the stable coins, perhaps BUSD, and then burned BUSD and then generated FTT? Is that what they did? It would be good to understand that process. And if they've done that, when funds started to flow out of the exchange and the FTT lost value, is that in itself the expectation of what the market is, or where the funds which were initially invested are still available, as part of the original value or the value at a point in time of FTT? So it's really it's a difficult one. I would probably say an audit trail is required. I know that the company bought in to sort of look at their corporate structure or lack thereof. Have since echoed the fact that there is almost no structure in place. And this is part of the problem. Some of these basics and these norms of the financial industry could have potentially saved FTX, right? Having a structure in place, knowing where all the responsibilities lie, and having the necessary expertise in place to ensure that the guardrails needed for a large company, which has received a lot of money in investments, are protected. But those guardrails, when they're not in place, the funds could have easily been, used for a number of different things, which could obviously, be where the funds went. So things like the properties they supposedly bought in the Bahamas and a number of other things. This isn't how investor funds are supposed to be utilized. And again, the lack of detail of where all that went. I would presume there's a number of things they've procured or bought over time with some of that money, which again is not on paper or perhaps not written down somewhere on the company records. They haven't perhaps filed anything. And this is the issue with again, the lack of experience in either running a company or especially a financial services company. These are the things that need to be taken into consideration.
Account. Yeah. So you mentioned earlier you're one of those who does believe there's a room for regulation in the cryptocurrency markets. And looking at some of the lessons coming out of what has happened with FTX, you mentioned, of course, the corporate oversight, the corporate structure, having some kind of background, bringing in some of the things from the traditional financial services sector. But also, as you mentioned, the Bahamas. The Bahamas has also come into play, or maybe into the equation, in terms of the company being incorporated there, and that being a deliberate decision also to sort of escape some kind of oversight from the U.S. What are some of the big regulations you see should be in place, looking at the lessons we're taking from FTX?
Yeah, so I think there needs to be a determination of, what cryptocurrency is, right? So to start off, are we saying it's a currency? Is that the view? Is that the view we're putting out there? Are we saying it's an asset, digital assets, like any kind of asset you have out there? Are we saying it's a commodity? We need to find a way to regulate it, using the traditional terms we already have. I think that would be the first start. Second thing I would say is just like banks, investment entities, or funds, or asset management companies, there's a certain kind of experience required or education required. And I know crypto is sometimes seen as fun, and there's a lot of companies out there or individuals who come out and create a coin or whatever, and they put it out there. I think there needs to be some sort of lid on that. There needs to be, not a forceful regulation, but at least at the very basics, some sort of education, some sort of knowledge required, some sort of exams you have to pass, as some regulators often set before companies or traders, for example, who work at the larger, investment banks or hedge funds. There are exams they often have to sit before they can take those jobs. So there are some of these things which I would say are now required before, I would say companies begin rolling out their own coin, which is akin to them printing their own money. Now, I'm not against, what crypto stands for, what the blockchain could bring. I'm a strong supporter of decentralized finance, and I certainly believe that in the future we'll see a lot of opportunities, not just, for example, within Nigeria or across different countries in Africa, but we will see a Pan-African opportunity where decentralized finance allows, individuals to smartly but appropriately, use their funds in different parts of Africa. Which will yield profit and create jobs for different people in the different regions, of the continent. So we see that happening. The opportunities are there, but we need to streamline for now. For there to be growth, we need some sort of consistency. We need to streamline what's happening. We need to bring confidence back into the market, and people need to start looking at the opportunities of how we solve everyday problems like financial inclusion issues that we still have in Africa, payment issues that we still have and we're looking to solve. We should find a way to join forces with the guys on ground already doing this and try that traditional finance, but using some of this newer technology to achieve these things, and perhaps take the foot off the gas of which coin is popping. This FOMO tradition,
fear of missing out. Yeah.
And again, it's really unfortunate because without the FTX issue, we noted the last time we spoke that Bitcoin had seen a period of low volatility, and the view then was on the 20K was cheap, and yes, we were about to see a rise in the price of Bitcoin, but what happened? FTX happened, and where are we now? 15.5 thousand. Where there's no support, we may even go lower. At this point.
And as you mentioned Bitcoin, let me ask this final question, get an answer from you quickly. So I was so interested to find out that there's an obituaries list, a Bitcoin obituaries list that sort of, you're laughing, that takes cognizance of the lows of Bitcoin. And Bitcoin has had a number of those, roughly 22 Bitcoin obituaries this year so far, 2 happening almost immediately after the FTX collapse. And even though it shouldn't be, as you said, a conversation of which coin is poppy and the FOMO, fear of missing out, everybody wants to jump on the trending situation, Bitcoin is the leading cryptocurrency. It is where everyone's attention is at. So in terms of this low that Bitcoin currently has, is this winter still a hibernation winter, or should we think about a spring coming up anytime soon, Ola, very quickly?
I can't give advice to anyone who wishes to buy Bitcoin.
No, I'm not asking you to tell them what to buy. No. Mm-hmm.
Well, I would say, when we talked about crypto winter, it was in line with a lot of other things. What the Fed was doing with raising rates, and the fact that the global growth seems to be slowing down, and crypto was just falling in line. But now, the crypto market is on its own. All the losses we've seen over the last couple of weeks, it's just purely been crypto seeing those losses. So there's one thing to have winter. So for example, we talk about winter, we have winter here in the United Kingdom, it's getting a little colder. And then you can compare it to winter in places like Alaska or places like Ontario in Canada or places like the North Pole itself. It's like a completely kind of different winter. So the winter which crypto is seeing right now, it's very cold. It's barren. It's scary, right? Is there light? Is there light at the end of the tunnel? Will we eventually see sunshine again on crypto? 100% yes. How long will this last? I think it's too early to say. I think let's see what happens coming into Christmas.
Okay.
Let's see. I mean, as of right now, as we speak, some good news. Binance, which is the de facto largest cryptocurrency exchange, has actually just released a note, and it has up to 78.7 billion in reserves.
Okay.
So this is the sort of good behavior, if you like, or sort of what we expect cryptocurrency exchanges to do, to be transparent with the reserves they have, put all that information out there.
And let the market decide.
Let the market decide. Let the market see that and say, well, hey, they're doing something right. I mean, they're one exchange, but I'd like to think that a lot of other exchanges, Coinbase included, even ourselves included, will follow that lead and be transparent with our reserves and start to follow some of the models which have been put in place over decades again
from the traditional
finance system. Let's not throw away what we've learned. Let's take from it and let's grow upon that. And I think there's so much to come from the cryptocurrency industry in the coming years.
And I'm very sure there are many people like you who will be saying that this too shall pass. Ola Atose, thank you so much for joining me. We'll be touching base with you soon.
Always a pleasure, Tolu.
All right.